Nike stock is down 32% over the last 5 years. It's down 22% year to date alone. I mean, the stock has been an absolute disaster. Many people have lost money on Nike stock, but you have many different popular investors like Bill Ackman. He has been very bullish on Nike as of the last few months. And he doesn't only have a position in Nike, but I also believe he has in the money call options for 2027. So he's extremely bullish on Nike, and he sees it as a massive turnaround story for a legacy brand like Nike. But for me personally, I've been bearish on the stock for the last 2 years. Whenever the stock was trading at 100, 120, I said my fair value was $65 per share. I very recently revised my fair value to $58 per share, but now the stock is trading at 57. So in this video, I'm gonna let you know if I believe that this is finally the time to be buying Nike, like this is really it, or maybe I believe, that the stock is just still overvalued and maybe I'm lowering my price again. So I'm gonna let you know my honest opinion, and I really hope you enjoy it as always. But before I get started into my own analysis, I'm just gonna give you some, you could say, free lessons or maybe free tips, I would say, because I'm not always right on 100% on every single stock. Sometimes I'm right, sometimes I'm wrong, but I pretty much nailed it on Nike for the last 2 to 3 years, while many people were buying the dip just because it was a quality company. And I did a video very recently on how to find and identify and avoid value traps in the market. And many times you have certain traps, but I'm going to talk about this one here. And for Nike, the main way I was able to identify that Nike was a trap was rising inventories. So anytime you have rising inventories, something like Nike, or any kind of a cyclical stock, what do you do whenever you have a lot of something? You have to discount the item to sell as much of it as possible, but you also have to somehow market the products to increase sales. So this is the worst kind of combination where you have to lower prices because you have more supply than demand, but you also have to market the product, and that just kills the stock. And normally such stories, they don't turn around in 1 year. They take 2 to 3 years on average to turn around. We've seen the same thing with Estee Lauder, the same exact problem with Estee Lauder, the same exact problem you could kind of say with Elf Beauty, and many different stocks in the retail sector that are somewhat cyclical. So anytime you see rising inventories with such stocks way above the average, just skip the stock. I mean, I would just wait for the turnaround and then I get back in. And that's how I determined that Nike was, you could say, a value trap in 2022 and 2023. But very recently, I mean, I'm seeing some interesting things happening with Nike. One of them is a director, or I believe he's an officer actually in the company, and he bought 8,600 shares around $58.46. It's not the largest buy ever for an insider, but at least insiders are buying. That's something that's very positive normally. Although I would prefer to see Elliott Hill, the CEO, buying some of Nike at those prices, but at least you have some directors they are buying despite their stock-based compensation. So that's very encouraging for something like Nike. But for the last earnings report, Nike pretty much did extremely well. They got 54 cents versus 29 cents expected. They also did a massive beat on revenues, but in terms of everything else, it has been really bad. Nike saw strong demand in December, followed by double-digit declines in January and February. And now Nike is facing two main issues. And I believe some of those issues aren't as bad as people believe. And that's why the stock is going down, not because everything is great, because the market is pricing in those issues. It's anticipating the potential impact of those issues. And once those issues eventually kick in, this is normally when stocks bottom. Stocks don't bottom whenever everyone is expecting them to. Stocks bottom when no one is expecting them to. And that because they price it in ahead of time before it actually happens. And the major risk very recently has been with Nike is the whole thing with tariffs. And with tariffs, they have a lot of their products made in China, and you have 145% tariff on China. You have certain tariffs on Vietnam and a few other countries, and that's really affecting Nike. But I found a very interesting piece from Bank of America, and I posted it on X, and many people found it helpful. And it mainly says that Nike's supply chain is diversified. with Vietnam, Indonesia, and China accounting for 50%, 27%, and 18%. So China only accounts 18% of their supply chain or their production, but the Chinese production serves the local market with limited exposure to the US. So most of their Chinese exposure or factories are mainly made for to be sold in China. They don't really ship them to the United States. If current tariffs remain in place, Nike's blended rate would be 16.75, resulting in a 1.1% margin impact. Nike could raise prices globally by a very manageable 2% to fully offset the pressure. So, in other words, Bank of America is saying that the tariff kind of issue with Nike isn't really the biggest issue ever. Like, it's not really as of a big deal as the market is expecting, as the market is pricing in. And I believe most of that stuff is priced in because only 18% is on China, and China has the highest tariff, and those products, they don't even come to the United States. They are mainly sold in China. So they might affect their Chinese sales in a certain way from maybe consumer sentiment or consumer preference. But in terms of the tariffs or prices going up so much, it's really not going to happen. And with Vietnam, I mean, I don't really know what's going to happen with that. But if those calculations are correct, then, 1.1% margin impact is peanuts. Like, it's pretty much nothing. And Nike could actually raise prices to offset the tariff impact. So the tariffs aren't as big of a problem as people believe. But the major problem with Nike that I was highlighting is more of the brand problem. The brand of Nike took a major hit over the last few years, and it mainly also because of people not being able to afford, the premium that Nike is charging for those shoes. And they don't really want just to have Nike shoes. They just want to have, maybe different kind of shoes that believe that looks cool, and it's just something a little bit different. And if you really look at the market share of Nike in 2023 and in 2024, Nike declined in market share from 15.2% to 14.1%. Adidas increased market share from 8.2 to 8.9. Puma has stayed flat. New Balance actually increased. On went up. And Hoka, which is getting very popular in the United States, a lot of people like those Hoka shoes. Those are also increasing market share. So everyone pretty much is taking market share from Nike. And this is not a good trend at all. So this is the biggest thing with Nike is innovation, is pricing, and it's mainly the brand in general. And Elliott Hill, the CEO, is trying to turn it around. And I'm seeing some very clever marketing from Nike as of recently, and them focusing on running shoes and products other than just the Air Force One, or I should say the Jordans. And it's been being successful so far, and I'm seeing a major difference. But the new CEO has appointed a new strategy head to aid the company's turnaround. So they're appointing new officers, changing the management around, and they're putting in new strategies, which is pretty amazing. And you have a very popular firm, and they're very bullish on Nike, and this is mainly Jefferies. And what Jefferies said is, despite the tariff impact, we anticipate a V-shaped recovery in fiscal 2027 and recommend aggressively buying shares at these levels. That's, a very bold call. And I said they had a recent visit to a Nike outlet store outside New York City, and they revealed insane traffic, a bullish sign for inventory clearance. Foot traffic, they noted, flipped positive in March, up to 0.5%, after declining of 15% in February and 5.2% in January. So they're seeing traffic actually increase in March. They're seeing the things that the new CEO is doing, they're playing out in real time, and they're very bullish on the stock. And this is really normally when stocks bottom. And whenever it just doesn't feel obvious. Like the last thing you would think of is Nike bottoming out whenever we have all those tariffs and all those uncertainties. But this is normally when it tends to happen. And Jeffrey is pointing out that most of that stuff is kind of priced in the company, and they're seeing a major shift in terms of foot traffic, which is very bullish for the company. Now, if we look at the multiple of Nike, it's still trading at 34 times forward earnings. 34 times is not pricing in anything that's too bleak, in my opinion. It's pricing in the best case scenario. But this could also be skewed, I would say, or it could be not too accurate, because if you look at the estimates, this is pricing in a 46% decline in earnings per share. So it's trading around 36 times depressed earnings, and it's unlikely to decline more than 46%. So there's a lot of upside pressure from here. In 2026, they're expecting a decline of 2%, and then 32%, 38% on the turnaround, and then 15% in 2029. It could be maybe too optimistic, but I believe the 2025 earnings per share is a little bit too much. Like, it's 47% decline is too much, and it will likely be better than expected. Now, for my valuation model on Nike before, I did admit that Nike is very hard to value because we don't really know when will the company turn around. I mean, it's very hard to know exactly when those things turn around and how long it's going to take and what kind of growth could Nike have after they turn it around. So it's very, very speculative. So all I did to value Nike before is I took the 440 in earnings per share estimate, which is very, you could say, optimistic, taking it from 212 to 440. This is more than a double in 5 years. So assuming Nike could double their earnings per share in pretty much 5 years, it gets to 440, and we time it by 25 times earnings, I'm getting $110 per share. If I divide that by 2, so if I'm trying to buy Nike to get a double in 5 years, this is around $55 per share, which is why I had a price target of $55 to $58 per share. Now, if you look at the multiple of Nike, the mean has been 28 times. Over the last 5 years, the mean PE has been actually around 33 times and now trading at 34. So if we're pricing it in at 25 times earnings, which might still be expensive, but on historical average, it's not really expensive. Like, the lowest it has traded at was 22 times. So if we take in 25 times earnings, the stock is a buy around $55. So for me personally, when I look at Nike today, I believe Nike stock is looking like a buy. It's looking much better. I'm starting to get a little bit more optimistic on the stock. I've been bearish on it for over 2 years, but I'm seeing all the ingredients for a turnaround. Inventories are starting to come down. Foot traffic is starting to go up. You have a new CEO, new management teams. They're changing a lot of strategies, doing something different. This is normally when those stocks tend to turn around. And looks like Nike is going to eventually pull it off. I don't know when. So for me personally, if you like Nike, I think Nike is finally looking good in terms of some kind of a speculative investment or some kind of a buy if you really want to own it. But if I'm being honest, I think there's much better opportunities in this market. And I normally try to value everything on a relative basis. So if, let's say, the market was trading at 6,500, there were no buying opportunities, and Nike was at 57, Nike would be much more attractive than it is now. Now, relative to other opportunities, Nike isn't as attractive. But if the S&P was at all-time high and Nike is at 57, then Nike is a much more attractive opportunity than it is right now. So that's what I think of Nike, that it is looking much better, but I think there's better opportunities in this market. And that's just my opinion on Nike. It's looking much better. Not financial advice. I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.